Let's go through the international arena right now. We're in the thick of third quarter earnings out of the US and the likes of Caterpillar shooting the lights out. Let's start with that and also obviously move on to Apple.
Yeah, Bronwyn, good evening. As you said, kicking off into the earnings season again, Caterpillar outstanding, expecting 5 cents a share, came in at a whopping 64 cents. We had Pfizer better than expected. We following hot and heels of Apple last night, also a fantastic set of results. So, the earnings season once again, after the surprises last quarter, seemed to be once again proving unbelievable. Yeah.
As you say, economic data coming out negative, but really being offset by the positive earnings momentum. Although we did see DuPont coming out, and there we saw the lower revenue line, which again disappointed the market.
Exactly, and also if you cast your mind back to Johnson & Johnson last week, which kicked off the consumer goods side of it, also low revenues, low sales, certainly. I guess for analysts to try to get their head around at the moment is are these earnings so much better on the back of, well, they're sustainable? Looking further down the trajectory for the line of what are they going to come out like? Well, it certainly appears that cost cutting, slashing sort of headcounts is what is pushing these earnings up. So is it sustainable? I guess that's what the analysts have to figure out.
And where do you lie on the sustainability issue? Let's get what you figured out to this point.
I guess for us it's where's the American consumer at this point? You've got a real tug of war at the moment between the fixed income bond guys and the equity guys, and of course throw into the mix the gold price up above, sitting near sort of multi-year 1,050, I think it was 1,054, which is a real
all-time highs.
Absolutely,
on the gold price.
And a real. It should be something. It should be buying gold against the inflation outlook, which is a perfect sweet spot for gold right now. But saying that, those numbers that came out today, PPI numbers, the rhetoric that's coming out of the Federal Reserve Committee saying inflation they expect to remain tame, doesn't quite tie up with what we see in the stock markets, what's happening to gold as well. So real sort of three-way tug of war happening. I guess those PPI numbers that came out today, the housing starts, building permits, all a little bit softer. That's only September numbers. So it appears, if you drill down, that the consumer's been helped certainly by the stimulus packages, by cash for clunkers, which finished last month, tax rebates. But I guess the question mark is, what more to drive this American consumer?
Coming now to the South African consumer and what we're seeing in terms of South African companies. Vodacom today saying that headline earnings per share for the year to September will be 10 to 20% lower. That stock under pressure. Are we going to see more of this from South African companies?
I think onshore we need to be a little bit more cautious. We've already got our own problems with the rand, which is going to really hurt those exporters. Our resource-heavy JSE with the likes of Harmony Gold, the miners, they're going to have a lot of problems as well, making earnings meet with this rand. And throw into the mix an Eskom rate rise coming around the corner early next year. We have a very muddied earnings onshore. And I think we've certainly taken a cautious approach, and certainly with that Vodacom, totally unexpected on our side. I think the investors and traders need to be cautious.
Where are you looking for value? I mean, there is money sitting on the sidelines. We've debated that extensively on the desk. But is there value, or is the market just looking too toppish? I mean, having spoken to Sam Hooley earlier, he was saying if you can pick up these high-quality stocks at the same prices as low-quality stocks that have run relatively hard. He referred to the likes of AVI, Sun International, Tiger Brands. Are you in that camp?
Sun International, we are. A bit disappointing. They cut their dividends, you remember, last time unexpectedly, which upset a few portfolio managers. But certainly, but again, that's run as well. A lot of these stocks have run quite hard at the moment, and I think you need to be they are a little bit fully priced. Still value in the likes of some of the consumer goods, the retailers, Spar Group still, maybe a little bit in the construction sector, Wilson Bailey, even though again, that's also run quite hard. I think it's very much a stock pickers market. We don't want to jump on the bandwagon where it's just dive into any sort of these commodity stocks. I mean, you have all the local guys very cautious with Billitons, very cautious with Anglos at these levels, and yet we had 2 upgrades today.
Deutsche Bank target price on Anglo American.
Emira as well, I think 29 pounds as a target price. Completely conflicts. It's interesting, you see the analysts, there's about 22 analysts that cover Anglo American. All the local guys have it way past their target price. All the offshore guys have it much higher, but I guess it's more element of the rand and the pound as well.
Well, how much emphasis can we actually place on these research notes, given what happened to Caterpillar? I mean, so far out, I mean, how could anybody follow those research notes?
Nice jog if you can get it. But again, with what we've seen, the theme, what happened the earnings were pricing an absolute Armageddon. Of course, it never happened. Now we've got to be a little bit cautious. I think the analysts have learned that China still be cautious, yet these earnings are hitting the top numbers.